Well, hello, hello. How you doing? This is your boy, Sean McLaughlin, Options Sean on Twitter. Today is October 26th, 2023, and this is the All-Star Options Jam session where we review action in the All-Star Options trade list. I don't want to call it a portfolio. We're not managing a portfolio for anybody here, but we do publish ideas regularly, multiple times per week. And we trade most of these trades, if the vast majority of them, and a lot of these trades either exited. I shouldn't say a lot, but we had a few trades exit this week. We have, I don't think we have any updated stops actually this week, which is a first for a while. And we'll talk about some new trades we put on. But before we do all that, before we jump into things, I have to, of course, drop the old disclaimer. Everything we discuss here is for educational purposes only. I'm showing you what I'm doing with my money. And I hope that you learn something along the way. So as always, let's start with the big picture. Here's the S&P 500. The S&P 500 is kind of hanging at a uncomfortable level if you're a bull. It really needs to start finding support quickly and bouncing if bulls have any hope of the seasonality I've been hearing all about kicking in and saving this market into the end of the year. It's kind of getting to the point where it's now or never. And it shows up even more. I don't have a chart for it, but it shows up even more in the Russell 2000, the IWM or the Russell. Boy, those charts just, they really need a win or we're running out of time. The volatility index kind of tells the same story. We're above 20, hanging at some high levels traditionally associated with fear and uncertainty in the markets. So that's something to keep an eye on. So that's the backdrop we're working on. So for exits this week, we have a mixed bag. We have 4 exits. 2 of them are wins. 2 of them are losses. Let's just get right into it. So first up is this Russell 2000. Oh, I do have a Russell 2000 chart. IWM Iron Condor. This was a trade that we put on back on September 25th. And the bet we were making is that the Russell was going to stay within 170 on the low end and south of 190 on the high end. The 190 was never in doubt, but we lost our support level down here below 170. So we exited this trade on the 24th, which was 2 days ago, Tuesday. Not a terrible loss. This IWM, let's see, we sold this originally for 325. We closed it this week for 350. So not a terrible loss. Certainly not a max loss, but we're out of the Russell 2000. It's breaking out of that range. Therefore, we do not want to be holding any delta neutral credit spreads in Russell 2000. Now here's some positive news. The technology sector, XLK, this was a short strangle that we put on October 4th. And on this one, we collected 250 for that spread. We sold the 175 calls and the 150 puts. We collected 250 for that spread. And I'm sorry, yeah, 250. And we bought it back on the 23rd. That was Monday for $1.25. Exactly how we drew it up. We bought it back for half of what we collected. That was the plan. It was, I don't want to say it was giving me sleepless nights, but this little run up here after we got in was making me think, uh-oh, we're going to get stops down on the upside. But the recent retracement brought us right back into the wheelhouse, and we got out of the XLK short strangle at our profit target. Now, back to the bad news. Bank of America, BAC. This is a trade we got quickly stopped out of. We got into this on October 18th. What did we do here? We bought, you would think that I would be very top of mind, but we have so many trades on, I forget what we do. But this was a risk reversal. So we did January options. We sold the 25 puts, and we bought the 30 calls in January. Well, our risk management level was 26. If Bank of America couldn't hold 26, then that was our signal to cut bait and get out, which is exactly what we did. When we put the trade on, when we sold those 25 puts and bought the 30 calls, we collected 10 cents up front. Not a big credit, but I like to have any kind of credit at all when I put risk reversals on. We collected 10 cents. While on our way out on the 24th, that was Tuesday, ended up costing us 95 cents to get out. So net, we lost 85 cents in the trade. Certainly nothing to worry about. Well within the realm of proper suitable small losses for our portfolio. So we're out of Bank of America. Now, back to the winning side. Merck. Merck was a short strangle as well. We did a November 110, 115 short strangle. We collected 235 when we put this trade on back on September 15th, right in here. And it tested us, man. Right here, intraday, we traded below our stop loss level. But guys, if you haven't heard me say this before, I'm going to repeat it again. I wait for closing prices when I exit my positions. I want to know where the stock closes. If it closes below my risk management level, then I will look to exit that trade at the open, near the open of trading on the next trading day. I don't want to get stopped out for intraday noise. And this one here is a perfect example of why I don't do that. On this red candle here, it got below our risk management level, but as you can see, it came back about $3, maybe $4, and closed well off the lows and just rallied straight up since then. So I'm glad I held my ground and it paid off. I got out of this spread for $1.15. Remember, or to remind you, I collected $2.35 when I got in. I paid $1.15 to get out. Exactly how we drew it up. Buying it back for half of our original credit. All right, so those are all the trades that we've exited since we last spoke. Now, we've got 4 trades that all have traded below their risk management levels today, this morning. So all these trades are on high alert. I haven't exited them yet. Just like I said with Merck, I'm going to wait to see where we close. And tomorrow morning, if we're still below the risk management level, I am out of these trades. So first one up is DraftKings. This is a trade we got into on 6/28, on June 28. We bought December 35 calls. We paid $1.40 for them. Well, it's below our risk management level. So this thing stays below 26, closes below 26 today. We will be pulling the plug on this one tomorrow. Next up, consumer discretionary ETF XLY. This is a short strangle. We are short the 150 puts. These are the ones that matter right now because right now, or last I checked, XLY is below 150. So if we close below 150 today, I will be out of XLY tomorrow. Chevron. Now this is a trade, boy, we've been in this one a long time. And I wish I had better news on this one, but we got into this trade back in February of 2022. This was a Leaps. We bought Leaps at the time. All right. Well, we bought it back in February of 2022. A month later, during this run-up, we were able to sell half of our position according to our plan that we laid out when we got into the trade. That took all of our original risk capital out of the trade. And so since then, we've been free riding, and this free ride was looking pretty good near these tops around 180, 185. Unfortunately, we've been raising our stop level as time has gone by, and our stop level in this stock is 155. And last I checked, we are below 155 intraday today. So if we close below 155, I will be exiting this position, and whatever I get, whatever I sell these calls for today or tomorrow will represent profit. So it's a profitable trade in the end. Not as much of a profit as we would have liked, of course, but hey, a profit. So maybe that's the good news. Maybe that's the silver lining. Whatever we sell them for, that's all profit. Okay, Google. This is we actually have 2 trades on in Google. They're not accurately shown in this chart, but the first trade we got into back on May 3rd, we bought December 120 calls. Now, the good news here is that we bought the December 120 calls. We sold half a week later, a little bit more than a week later, just like in Chevron, taking all of our original risk capital out of the trade. So now we're free riding on that position. And the level we're watching is 125. And right now Google is below 125. So if it stays there, closes below 125, we'll be getting out tomorrow. The nice thing is for that first trade, whatever we sell that call for, that December 120 call, that will be pure profit. So that's good news. However, we have a second trade on in Google, which is not shown here. We have a risk reversal on, and we're short the December 25 puts, the December 125 puts in March, which are now in the money. That's not good. And so we'll be closing that trade down, closing the short puts, selling the long calls, and booking a loss on that part of the trade. Net, it might be a wash all in. We'll see how it shakes out. But I wish I had better news on Google, but at least one of those trades worked out. All right, next up. Oh, well, that's it. That's it for all trades we need to review. That's the good news. We had a lot to cover here this week. It's, bull market or bear markets they're tough, man. And I mean, we could argue whether or not this is a bear market, but no matter how you slice it, it's been choppy. Bulls and bears alike are getting frustrated, myself included. I feel like every directional bet I've put on in recent weeks, recent months, has been quickly stopped out. The only trades that have been keeping me afloat have been short premium trades, but even those haven't all been working out. They've, especially on the downside, the short puts. If I've had short puts in those trades, they've been getting tested. So let's talk about the new trades we've put on this week. I'm not going to give you the full details on these trades. They can be found on the website, allstarcharts.com. Head to the options members section. You can get all our trade ideas there. If you don't have access to that, please reach out to us. Shoot us an email, info@allstarcharts.com. We'll get you hooked up. Anyway, we put a delta neutral trade on in XLP. We did this on Friday. So that's where we're at for XLP. The bond ETF, we're making a little bit of a directional bet here. I'm making the bet that this recent low is going to stick at least for a little while. Head to the website to see how I played it. And finally, Microsoft. This is a trade we got into yesterday. We've talked about this on the morning show and in other venues. So I can say that this is a short strangle with some protection. All right, so with Microsoft, we sold the 310 puts and we sold the 360 calls. My bet is that these highs are not going to get tested anytime soon, not in this market environment. So I'm naked short the 360 calls, but I'm also short the 310 puts. I'm betting that this low is going to continue acting as support, but I did protect the downside. I bought the 300 puts against it just because this market's getting slippery and who knows. All in, I have a net credit in the trade, and I'll look to buy this back if I could close the whole thing down for half of what I collected yesterday. Again, details can be found at allstarcharts.com. All right, folks, that's all I have for you today. I hope you're hanging in there. I hope you're selling premium. I hope you're managing your risks, because this is the type of market that you need to do that more so than any. If you have any questions about anything we've discussed here or want to get involved in All-Star Options, shoot me an email at info@allstarcharts.com. and we will be sure to hook you up. Until next week, take care. I'll see you on the morning show. Bye-bye. All right. Okay, dude, that little bell you heard means I got to make a trade, so I got to go. That's it.